All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So we're going to get started with our morning analysis, and we're going to go with the euro dollar first and foremost, as we always do. So let's go over to the euro, and let's see what we've got going on. So when I was talking with Paulie, I was talking about an ascending wedge developing, and this is what I meant by that. So if you were unclear of what I was looking at as Paul was talking, and I said, I see an ascending wedge. This is exactly what I was viewing. Okay, now what that really means to us right now is that we're making higher highs and higher low, and higher lows, but the rate at which the higher highs are happening at a slower rate than the higher lows. And so what that means is that the euro dollar at this point is it looks like it's grinding higher, and whenever you get that grinding cessation like that, chances are that there's a higher chance that we break lower than we break higher. Now I was originally looking at this, and then I pulled back this trend line all the way back to back here, and you can see it's been more of an ascending wedge than anything, especially over the last last couple of weeks, last 2 weeks. Now, what is going to need to happen in the euro dollar is we're going to have to breach some of this support through here to actually turn it lower. So in other words, we have to stop making higher lows. Once we start making lower lows, that's when it increases, the risk increases for a downside move. Now, what I was also gonna do really quick is see where resistance comes in. Obviously, we have this resistance here that Paul was just talking about around the 1450 level. Okay, 1450, 14. Yeah, it looks like 1450. That high is 1460. And we've surpassed the 786 retracement. Matter of fact, there's that 88% retracement that we had put in there. We'd surpassed that, but I'm not looking at that fib level. I'm just noticing that we have 1460 is going to be probably a pretty big deal. Now, if you go out to this previous move, I'm assuming we're near a 50% retracement. So if you go to that spike high around 117 to the low around 111, yeah, the 50% retracement comes into play here. The 618 is right here. I mean, so this is all very big resistance as we approach it. So I'm going to put resistance at being 114, 114, whatever the high is here, 60. Okay, 114.60 will be key resistance. 114.60 key resistance. Now, in order for the euro to really turn, because you can see every time the euro dips, it's bought back up again. We are making higher lows, higher low, higher low, higher low. That low right there has to hold. Now, I know it's not very far away, but it's 113.80. We breached through 113.80. The risks of a downside move will start to increase. Okay, 113.80 is support at this moment. We're still in a range environment. Nothing's changed there. Okay, let's take a look at the cable. So the pound, like I said, pound raced back. I was surprised that we raced back up, especially on the data that we got overnight. I mean, we did, like I said, the unemployment rate did drop, but claimant count change went up. So that's the equivalent of the unemployment claims. Average earnings index came down. So wage growth is not there. But we did see an improvement in the unemployment rate. Excuse me, which pushed us right back up towards resistance. Now, let's delete all this stuff because I drew this all out on Friday. So, 50% retracement is still sticky, and that is right here. It's 113 or 153.80 basically. Okay. That is key resistance, and I'll take that spike high right there at 113.86, so 113.85, really key resistance today. Yeah, it's probably not a bad short right now. If you guys want to take a short at this point, I'm trying to get I'm still trying to, get my arms around the market, so I'm not establishing any new trades at the moment. But if you want to establish a short in the cable, your risk is probably above 154. I don't know how much more above that I would risk. And you got to imagine, because it's the cable, you got to imagine, possibly a breakout to the highs and then reversal. It's pretty good at doing that, as you all know. So I'd keep resistance somewhere around here. Now support, I don't know if this is the high, so I can't start drawing fibs yet. The support will be at least down here below 152. So whatever these spike highs were, 152.90. This is gonna at least be support on the way back down, at least. Okay, there's probably more support than that, but for now, that's about all I can draw out as 152.90. All right, let's go take a look at the Swissy. So the Swissy, I'm still long, by the way. All right, we are at a 50%, and I'm long with Swissy, as you all know, more as a, being short Swiss francs. Even though it is the dollar, so it is obviously being negatively affected at this point. But to me, it looks very similar to the euro in respect that we do have more of a descending wedge, just like the euro is an ascending wedge. Okay, you can see it looks something like this. So what that actually means, support will be down here at 95.25. Okay, that is support, 95.25. Resistance, we'll have to get back above here, which is 95.83. We'll call it 95.85. And you can see it's also previous support over here. Okay, so we have to get at least above 95.85 and probably above 96 cents really to be a significant break. But 95.85, we have to at least get above 95.85 before considering playing it to the long side, in my opinion. For those of you that are looking for longs and you're looking for a reversal here, I would at least wait for that, because once you get above that and the 96 cent level, then you got a descending wedge breakout, probably take us right back up to range highs. Okay, but you'd want. Hold on one second. All right, let's go over to the dollar yen. Okay, so here's the dollar yen, and this is the risk to the dollar right now, in my opinion, because the dollar yen, as you can see, we're near levels that the yen pairs can start to get squirrely, and the dollar yen tends to kickstart, dollar weakness. So if the dollar yen starts to fall, which you have to think that's probably going to be a result of the stock market coming lower. Okay, if we start to fall here in the dollar yen, that could provoke dollar weakness across the board, and we'd have to see the stock market actually falling in tandem. We'd have to see it falling in tandem in order to get the other yen pairs to move as well. So watch this 119.40 level. That should be good support. This is a 618. I'm going to actually write down the number. It's 119.38. Resistance. You can see this has just been a real slow, steady grind lower. So we're going to have to get above 119.75 to take the downside pressure off. All right, let's go take a look at the Canadian. So the dollar Canadian, and this is, you know, I noticed this actually when I glanced at the charts yesterday, that we're developing a possible, okay, inverted head and shoulder pattern. But, you know, I mean, crude moving from 50 down to 47, basically where we're at, has failed to really produce a move higher in the dollar Canadian. Okay, and so with that being said, you have to be very careful with the dollar Canadian at this point. This support has to hold. That is a 786 retracement, basically. So 129.50 has to hold. That spike low. Okay, that is important support for dollar Canadian. Now, resistance, we don't have any Canadian data coming out today, do we? No, we don't. It's all US data. So the dollar Canadian really, I mean, in order to be a nice inverted head and shoulder pattern that plays out, you know, like this would be textbook if it plays out, but it has to breach that 130.80. Okay, 130.80. Then we have a textbook inverted head and shoulder pattern. Doesn't always happen like that. So, and it looks, whenever a head and shoulder pattern looks too good to be true, it usually is. That means that if it looks like this and it looks perfect, then it's probably we're going to head lower, because they tend not to be perfect, in my experience. So anyway, 130.80 is going to be really key resistance today. We're going to have to see a pretty significant move higher in the dollar Canadian, or for that to happen. Like I said, one of the things about the dollar Canadian is that crude oil has come off from 50 bucks, and it's really that weakness in crude over the last, you know, couple of trading sessions, you would think would have resulted in a move higher in the dollar Canadian. It has not. Okay, it hasn't. All right, let's go over to the Kiwi. Now, the New Zealand dollar, I still have a short in, and I've had it since Friday. I'm basically short at 166.90. Well, let's see what my cost average is. Let me look over here. 166.91 is my cost average. I'm down 45 pips in it. Like I said, I got limited out of my Canadian. I got limited out of my pound. My limit order in the Kiwi dollar is down here, because I was thinking the Kiwi was going to make a 50% retracement, so I thought we were going to come all the way back down here, and that has not happened. Because we had flag pattern, flag pattern, flag pattern, flag pattern, also a 38% retracement on the daily chart. So I'm like, oh, easy rejection reversal. Okay, but the Kiwi has turned around. We hit actually new highs overnight. Daryl had mentioned, and Patrick says Wheeler's caveats also suggested no sense in urgency, and easing boosted the Kiwi. Those are comments, Patrick, from Mark Chandler. I read his piece this morning. Daryl said Wheeler then added that recent data is encouraging, and future rate moves would be data dependent. So overall, he was a bit more optimistic than last time. See, I didn't catch that part of it, Daryl. So thank you very much. But so all I caught when I was driving was that that Wheeler had talked about, more rate cuts may be appropriate, but I didn't catch all of his comments because I was driving. Which then explains the reason why we hit new highs. Now, like I said, the thing about the Kiwi, this race up to new highs, this looks more of positioning than anything. It's like everybody was short the Kiwi, like we raced up to squeeze everybody out. The Aussie New Zealand, probably a big liquidation. I know I got stopped out, so I know probably a lot of people got stopped out about below that 38% retracement. So so that happened. Oh, and yeah, just so you guys know, I am still short the Canadian yen and New Zealand yen from Friday. Now the New Zealand yen, I'm still up 10 pips. I was up earlier, I was up like 30 pips. Now I'm only up 11. Canadian yen, I'm up 82 pips from Friday. I'm still sitting in those, by the way, which, obviously I have to rethink if I'm going to stay in those or not. But I think the equity markets look weak enough to where I'll probably be able to hang on to them. Anyway, going back to the Kiwi dollar, the Kiwi dollar raced up in the highs, breached new highs. Relative strength didn't follow. Okay, I know there's a lot of resistance up here. Okay, we all know that from Friday. Okay, the high here is going to be at 67.70. That's not too far away, but that is possible. Okay, so 67.70, that spike high up here, I think it is doable. You can see we're knocking our head up against a lot of resistance. The Kiwi has struggled up here, for the last several months, and I don't think this is going to be any time different, especially after having so many flag patterns that we've had. You can see the multiple, 4 different flag patterns higher. 1, 2, 3. That was like the 4th flag, right? The last thrust into this resistance. You're probably going to struggle up here. So any move up to 67.70 is probably going to find some pretty good resistance. But 67.70. But what I would probably be looking for if I wanted to play the Kiwi to the short side, and I am short, but I'm just saying for anybody who wants to establish new positions, I'd probably be waiting for a turn in the euro, the cable, the Swiss, seeing the dollar rally against other currencies to give you that confidence that that you're going to get some follow through in the Kiwi too. That would be the way I'd play it. In other words, I'd wait for the dollar to start to firm up against other currencies before actually going long the dollar against the Kiwi at this stage. Support, it would be right here, but we're going to have to write that down, that spike low from overnight. 66.17. What's our ATR here? Our day range has been 131 pips thus far. That surpassed our daily ATR already. Okay, so 66.18 would be the low. 66.20 is going to be support. If it got to 67.70, it'd be double its ATR, near double its ATR. Let's go over to the Aussie. Okay, so the Aussie dollar, we had China CPI data come in weaker than I expected. Producer prices came in line. Aussie's really been underperforming here. We had this the Garley pattern, perfect. Of course, I didn't short the Aussie, which would have been, this is the one that you really wanted to be short of, and instead I shorted the Kiwi. So I didn't get the result that I really wanted here, but that was a perfect Garley pattern that played out really nice from Friday. So 72 cents will be support. Resistance is going to be a move back up to 73 cents. Seems pretty easy to identify here. So any move up to 73 will be resistance. Support will be at 72 or just sub 72, whatever the lows are here. Yeah, 73 and 72 cents would be it. So 0.73 7-2, and we continue in a very, very range type of environment. Okay, very type of range type of environment. So just be real careful with the markets at this point. All right, I'll be back in a few minutes. When I come back, we'll do the dollar index. We'll take a look at the peso, the Norwegian krona. We'll take a look at Swedish krona, and I'm going to take a look at some of the emerging market currencies. I want to see where they're at, because it'll tell me a lot about risk appetite. All right, don't go anywhere. Be right back. All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. So I wanted to finish up with the dollar index really quick, and just also just to note, Dow futures are up 7 points, S&P futures are up a 1.5, Nasdaq futures are down 1.5, $1.50. Real slow morning thus far. All right, let's go into the dollar index. Okay. So the dollar index has come under a lot of pressure, okay, the last couple of days, and a little, here, okay, and the dollar's really had a very difficult time with any type of rally. You can see we did pause for a couple of days, and then we're resuming our downtrend. So if you go over to like a 4-hour chart of the dollar, you can see we're just stabbing into a new low. Okay, that means that this support right over here is going to come into play, and it's going to be very significant for the dollar. All right, that low comes in at 94.20, and I'm going to zoom. Oops, I'm going to zoom out just a bit. Okay, we're also going to draw a fib from the lows, the spike low here, to the high. We're going to extend those lines. Okay, 618. I mean, it's going to be really important because it's the same price, and that comes in right here at 94, basically 94.15. Real significant support for the dollar. Because you might go, oh well, that 94.15. You might say, well, why are you drawing it after after we moved up there? Well, it's because that was the last known high, and the 618 happens to coincide with that spike low, which makes it extremely, extremely important support. Let's see if I can grab a. It's not gonna. I have to move this whole thing. Oh, I guess that line didn't draw. All right, that's fine. Here, let's do it like this. There you go. Okay. Very, very important. Oh, no. Okay, my bad. The 618 is actually right there. That's my bad. Oh, no. I should be correct. Yeah. Spike low. 618. There we go. All right. Spike low to the high. 618. It all comes in at 94.15. Very important support for the dollar today. That means that's the euro dollar at basically 114.60, right? It's going to be very important resistance for the euro. Very important support for the dollar. Now, resistance for the dollar. In order for the dollar to actually get a move, get a squeeze going, we'd have to break back above 95 cents. Period. End of story. But above 95 cents, you should see a squeeze higher in the dollar. And we're in a big range. Now let's go take a look at the peso. We make our way over there. So the peso held support. It's interesting. we held support and bounced. I think one of the reasons why we bounced here is because of risk aversion. You know, as the market came down yesterday, as you guys know, these emerging market currencies tend to get hit when they tend to get hit when there's risk aversion. So what'll be interesting about the peso, and I think this is one way that you can gauge if there's going to be some risk aversion, is right here. And that'll help you too. I mean, because let's get rid of this really quick. Excuse me. A break above this 11670 right through here, that would tell me that stocks are probably coming under a lot of pressure. And if that happens, then you guys know you need to start looking at the yen for possible longs, meaning, you know, short the dollar yen, short the New Zealand yen, short, you know, things like that. But you'd have to get a move above this resistance, and that would suggest that there is risk aversion coming into the market. So for those of you that, you know, if you trade equities and you're like, well, I'm shorting the S&P, well, great. If you're going to short the S&P, you might want to make sure that the peso, the dollar Mexican peso, is moving higher as a result. Okay, if that makes any sense to you. That resistance will come in at 1670. So, oops, what did I type? Okay, and that dynamic will shift at some point. It's just that correlation is strong right now, so you have to be keen to it at the moment. $16.69. Trick is knowing when it shifts and when it doesn't. All right, and then obviously the lower end of the range. As risk appetite improves, this support is holding thus far, you know, through here. Or we have trend line support that's coming into play too. So 1638 basically is support. And if we break below that 1638 level, then you know that stocks are probably going to continue to rally. All right, let's go over to the Norwegian krona. Rallies are capped here, big time. Get rid of this fib. So any move from here, now this is a daily chart, so I'm a little too lenient at the moment here. Any move up to this resistance, it's going to be really tough for this to scale. A24. So A24 is going to be key resistance for the US dollar Norwegian krona. Support here is at 803. We went from a bullish trend into a range. Now that we're below that trend line, let's go over to the Swedish krona. Ooh, wow, we are really close to support. For those of you guys that are looking for longs, I mean, look at the 127% extension is just below. It might not be a bad place to be on the long side down here. So I'm going to write that down as 806. For those of you that can play that. Oh, shoot, I hit the wrong mouse button. Try that again. That's 820. 805, 820. We're at the lower end of our range, so we got to start looking for a turn down here. 8.05, right? Is that what I want to write down? 805 and 820. Because if the dollar stages a rally, and we can break above 820 in the US dollar Swedish krona, all we're going to do is head right back into the upper end of our range. So keep your eye here. All right, let's go over to the, I'm going to take a real quick look at, let's go over to US dollar, South African rand really quick. Should be coming down because risk appetite's improving, and it is. Same thing here. Yep. Same with the Brazilian real. Hasn't come down as much, but still. Okay. Yeah, they're all showing improved risk appetite at the moment. All right, so here's your bias chart. It is done. Let me take some questions. And okay, so Bob says, what